doing well though, even in a recovering market, is Honasa Consumer, that is parent company of Mamaearth, and that is under pressure and is now below its IPO price after its second quarter results. Mangalam is here with the details.
Well, if you look at Honasa's, stock price, it is down 20% and locked at lower circuit with pending sell orders as well. So fair to say there is no glow for Mamaearth this time around. If you look at the stock price as well, it is below its issue price. And if you look at, the entire stock price move from its highs post-listing. Remember, same time around last year was when we saw the listing of Mamaearth. From its 52-week high, the stock is nearly halved, 45% decline after a 20% fall today as well. For those, I jog their memory, the issue price was around 324 rupees itself. What was it that led to the weakness this time around? Let's go across with the numbers itself. There was a revenue decline, EBITDA decline, as well as the net profit loss. And that was on account of two engines of the company that failed to propel this time around. One, there was disruption due to distribution model change. Remember, the company had called that out in the previous quarter itself, but this time around the number was slightly higher than what the company had anticipated. Secondly, and the bigger reason, is Mamaearth itself, the mother brand, is growing slower than expectations. So as a result of which, if you look at the reported numbers for Mamaearth, the revenues are down by almost 7%. The EBITDA from a gain of 40 crores has gone into a loss of 31 crores. And on the bottom line, the company is reporting an 18 crore loss versus a profit of 29 crores. And that has impacted some of their other parameters as well. One of the levers for margin improvement would be ad spends as a percentage of sales, but decline in revenue meant that the ad spends also have increased by almost 500 basis points as a percentage of sales, and gross margins have stayed stable at around 68-69% itself. Their other brands grew by about 30%, in the first half of this year, and they are targeting improvement out there, but other brands just account for 30% of their overall sales. The problem is Mamaearth itself. What is it that is causing the worry for Mamaearth? Now, if you go to any of your beauty stores or speak to anyone who buys a lot of these beauty products, they would know that the wave of consumer preference has moved towards active ingredient-based products and not just natural products. So you have products with niacinamide, hyaluronic acid, peptide, etc. selling on the market. So that's against the positioning of Mamaearth itself. Secondly, the company needs investment allocation which haven't evolved for offline-based brands. So that is something that needs a bit of a reset. And the third most important thing that we need to watch out for is the brand mix across product, price, and communication. So basically, it's time for a bit of a reset. How much time will this and the other thing take? The management says that as far as the distribution is concerned, offtake scale-up of new distributors would take 2 to 3 more quarters as well. Now, this at a time when the street was paying a premium for growth for Mamaearth, which was over and above the industry. At least 2x as promised by Varun Alag has not come by, and now the street is resetting its expectations until the company goes ahead and does better on either of the two fronts, which is improved distribution offtake or comes up with a strategy for Mamaearth itself. Until that happens, maybe all bets are off, and that's what brokerages are saying, and that explains the weakness in Mamaearth. What will be interesting to see is whether this weakness sustains until there is improvement or not.
Will be interesting to see as well, right? We'll keep an eye out on that. Mangalam, thanks a lot for that update. A 20% circuit for Honasa Consumer on the lower side, of course, with pending sell orders, as Mangalam was highlighting. Time for a short break. Up next.